Shares of Warner Brothers Discovery lower this morning, almost 10%. The company reported a $9.1 billion write-down on its TV networks, also missed estimates on second quarter sales. Revenue at its TV networks, which include TNT, TBS, and Discovery, was down 8% to $5.3 billion. Joining us now is Tom Rogers, Oorbit Gaming Executive Chairman, former NBC Cable President, and a CNBC contributor. Tom, we were, maybe your ears were burning a little, or do they itch or burn, whatever they do when someone's talking about you. We were talking about you earlier in reference to Disney and Netflix, but we just introed you talking about Warner Brothers or Discovery. And Andrew earlier said something I thought was pretty profound, and that is there any media company that shouldn't have sold to someone 3 or 4 years ago and let that someone ride the industry malaise down? I mean, everybody should have probably sold, and then whoever ended up with everything would be eating these difficult conditions.
Well, good morning, Joe. Well, that's what AT&T did to Discovery, as you know. I think we could really do on the other hand with Disney and Warner both reporting yesterday. Obviously, two companies that are collaborating on the venue sports venture that they have together, along with Disney Plus Hulu Max bundle. But two very different outcomes based on their earnings. Disney announced that their streaming business swung to profitability. Warner had previously announced that it had a profitable streaming business, and it swung to a loss, although there's an asterisk there because their streaming numbers include HBO Cable, so it's not really an apples to apples. Disney was talking about a strong ad market and talking about overall ad revenues up 8%, ESPN ad revenues up 17%. And Warner was talking about a soft ad market and ad revenues down 9%. And when it came to overall revenues, Disney really hit a milestone that analysts haven't focused on, the milestone being that this quarter, their streaming revenues actually began to exceed their legacy media revenues in terms of their network traditional television revenue. And Warner is still about 80% of its revenues come from its cable networks. On one bright side, Warner actually grew subs, international subs, quite healthily. Disney actually lost a little bit of subs on the international front. And Warner's number, again, are obscured by the HBO Cable thing. My guess is they lost HBO Cable subs, so their actual gain of streaming subs may have been greater than they reported. I don't know why they mix those two together. It really doesn't give a clear view. Of course, Disney won the NBA, and Warner lost the NBA. Disney paying to get out of a partnership with your parent company, and Warner, I think, needs a partnership very badly.
I mean, neither stock, if you've owned it for the past 3 years, you're not doing well. I mean, Disney's not doing much better, obviously, even though what you just described are much better operating results. Well, let me ask you a question. So if you were David Zaslav and you owned Discovery and that deal came along, the assets that you were able to buy, it was going to be hard because of the debt that you had to take on. Would you have done it? You would have done it, wouldn't you? And do you think in the end, he's still able to right the ship if you get debt paid down? Or has the whole industry changed to where it makes that difficult?
Well, it's certainly gotten more difficult in the last 2 years, and certainly having the opportunity to create a media group like that, I think anybody would find hard to resist. And
right.
Got to always point out that their debt is locked up at about 4% for the next 13, 14 years. So a lot of debt, but nothing by way of terms that are going to kill them. I think if I were David now, I would be actively looking to join forces with somebody. Max and Paramount Plus are the obvious combination. HBO was really the crown jewel that the whole future of Warner was going to be built around. And its sub-growth is obviously needs to pick up substantially. They are in as many countries as any media company is, Discovery International having been a real success. But their engagement is weak in terms of viewing. Both Tubi and Roku, two free streaming services, actually exceed Max's viewing now. So they got to strengthen that.
Tom, you said you thought that Paramount was the natural partner. For a very long time, people talked about the parent company of this network, Comcast and NBC Universal, being a natural partner for Warner Brothers. Why Paramount?
Well, I think the new owners of Paramount have to also think about what they're going to do with Paramount Plus. I think that those are probably the two weak players backed by strong studios that have the ability, I think, if they combine, to create something of much greater strength in streaming. Peacock has invested heavily in sports with NBC, getting the NBA, having the NFL. Obviously, what they're doing with the Olympics on Peacock is really extraordinary. I think they'll probably come out of the Olympics, especially with the very low price deal that Peacock's offering subscribers, with a real subscriber boost, and obviously Comcast has a much stronger balance sheet. I think the two big sisters.